Hello friends, what a week it has been for Chinese stocks, what a mayhem, and what a mayhem also for my biggest holding, Alibaba. We need to discuss this now, so let's dig right in. It has been gloomy 2 years for Alibaba stock, and as you can see from this price chart, and it is getting gloomier all the time. Let me remind you of a deep dive video I did on Alibaba 1 year ago. Go check it out. That is the video where I explain my investment thesis on Alibaba pretty thoroughly. So if you're not familiar with those things, go watch it after this video to get some background knowledge. But as a quick recap, here are the main pros and cons of Alibaba and why I invested in it. The first pro, it has a strong position in Chinese e-commerce market, expanding internationally all the time. This is the platform. And financial 1/3 ownership. Alipay, hundreds of millions of users, leading digital payment platform in China. This is the payment method. And 3, Xinyao, sorry for the pronunciation, I don't speak Chinese unfortunately. Xinyao logistics services, this is the logistics. And when you have platform, payment and logistics combined, that is control over the whole consumer experience, which obviously is a great thing for business to develop, to control the whole consumer experience, and you can tweak anything that needs to be tweaked and develop anything that needs to be developed so that you can offer the best value for the consumer. I like it. Then, Alibaba is a spawner. It creates new businesses in its own ecosystem, lots of them. This is something you want to see from a high quality company. Alibaba, then moving on, Alibaba has a growing cloud business, which is very interesting, most likely very profitable in the future. The stock price is down due to sentiment fear as the stock starts to decline. ETFs and funds start offloading it because they cannot hold losers in their portfolios, causes even more downward spiral. This has nothing to do with the underlying business. So this is what has been happening recently. The fear reigns over Alibaba and Chinese stocks, and I would even go as far as saying that their valuations are not based on fundamentals anymore. They are based on fear of geopolitical tensions, not on the business values. Then, the middle class in China still growing, still a macro tailwind for the long term. And finally, exporting Chinese goods, and Alibaba is exporting Chinese goods and serving Chinese people, thus creating happier life for the Chinese. Thus, the mission aligns with Communist Party's goals. Different from other Chinese stocks in trouble 1 year ago, like the education stocks. So, if you remember from 1 year ago, the education stocks from China crashed because Communist Party cracked down on them, but they did it for a good reason, because these education stocks companies were not providing value to China or Chinese consumers. They were well, it's a long story. You should go probably and read news about the whole story, but to put it really shortly, they were selling their services which were kind of not needed, taking money from parents to education that was not needed, and didn't create value for anyone. So it wasn't that surprising that Chinese Communist Party took action and cracked down on these education stocks. Just as an example, that if your business is aligned with the Communist Party, you are allowed to continue your operations as Alibaba is aligned. But if you start taking profiteering, doing shady stuff with the Chinese consumer, then you are in trouble with the Communist Party, and we all know how that will end as a Chinese business. And basically this is what happened with the education stocks. Then moving to the bad things around Alibaba stock, the cons. Of course, the VIE structure, Chinese Communist Party calls all shots. Well, this shouldn't be a surprise to anyone. Monish Pabrai has said, Alibaba is a crown jewel for China. These are the places with possibility of global footprint. Government will not take an approach that will kill the golden goose. Kind of relating to those, what I just talked about, the education stocks versus Alibaba. Communist Party doesn't want to kill Alibaba. Alibaba is important for it. Delisting from New York Stock Exchange. If happens, the stock probably goes down, but then it can be bought from Hong Kong. Could that actually be seen even as an opportunity to buy more of good stuff with even cheaper price and not as a risk, I would say? Well, Only future will tell if Alibaba will be delisted from New York Stock Exchange. Then finally, the hot potato, the thing everybody's talking about, US versus China conflict. Already talked about it 1 year ago. Everything is possible, but in war, trade war, there are only losers on all sides. And so it is. Let's come back to this point in a minute. But actually, concerning all of these points, I don't actually think any of these have changed too much even during the last year. On top of these, since I made the Alibaba video 1 year ago, we have the COVID-0 policy that has made life even more difficult for the Chinese companies. But there will be surely a day in the near future, and I do mean in the near future, when China too lets go of COVID-0 policy. It will not reach its stated economic goals with the current restrictions that they are having. So if those economic goals want to be achieved, you cannot do it with COVID-0 policies as they stand today. All of this leads me back to only one risk around Alibaba, that is China choosing Russia's path. It seems that as an investment, this is the last thing I need to assess to determine should I continue owning Alibaba and owning it as my biggest position in my portfolio. So has something really changed in China? They have always opposed Taiwan's independence, nothing new there. They have always been a communist country, nothing new there. Rhetoric between China and USA has developed to worse direction, and they are ever increasingly and publicly competing in many arenas. That is true, and obviously not good for businesses, not good for Alibaba either, and not good for the whole world. If anything, the whole world has seen in Russia's unlawful attack on Ukraine that there are truly only losers on all sides in a war. I want to stay optimistic about the future, and it would be truly unimaginable for me, despite harsh rhetoric by Chinese leadership towards Taiwanese people, who should be left alone like Ukrainians should have been left alone, that China would be so stupid to start a war with Taiwan. China should know better, watching how well it is going now with their Russian allies or semi-allies or whatever the relationship between Russia and China now is. I am not a geopolitical expert, but unfortunately, in this case, I was forced to little bit become one, because in the end, the truth is that anything is possible. That has been proven to us by Russia's idiotism. Big risks exist around Alibaba, but big rewards also if sense will reign over craziness in the Chinese leadership in the future. When it comes to geopolitics, this is what George Yeo, a Singaporean former politician and brigadier general who served as Minister for Foreign Affairs for Singapore between 2004 and 2011, had to say in South China Morning Post's interview very recently. And by the way, as I do with the sources I check, I always check the sources who, and in this case I wanted to check who owns South China Morning Post, and this was kind of an awkward thing because I probably should have known myself that because the owner of this South China Morning Post is who else than Alibaba. So that was kind of a funny thing to find out, but nevertheless the interview itself was very interesting, and Yeo seems like one of the best persons out there to discuss current geopolitics, and does so in a very honest and very open manner in this interview. So I encourage you to go check that interview. It was really interesting. What Yeo said in the interview, quote, "China knows that the time is on its side. It should not fight now if it can fight later, and it will not be necessary to fight later, because by that time it will be strong enough to prevent a war from happening." End of quote. The quote continues. If the US wants to push China into a win-lose position, China will say, "I prefer win-win, but let it be lose-lose, and let's stay lose-lose until you, in your wisdom, come to the conclusion that we are both better off being in the win-win quadrant." End of quote. While Yeo seems to acknowledge risks, and I share his view that anything can happen with Taiwan, China and USA, I still get the feeling that he too believes China does not seek a war like Russia does. There will be power struggles always in geopolitics, that will be for sure, but I too hope that those battles will be fought in different arenas and never with guns and missiles like in Ukraine now. I said this before and I say it again. I don't think China and Russia are the same. China has seen throughout recent decades huge leaps forward with its technology and economy benefiting its growing middle class. Russia, on the other hand, seems to be stuck being the gas station of the world, and they don't have much else going on. Not the same country, these two, in my opinion. According to Trading Economics, 63% of Russian exports have been fuels and energy products. In the future, hopefully, the demand for fossils will go down rapidly, and so will the relevance of Russia for the rest of the world. China, as we all know, has much more to give to the world than Russia in terms of exports. So, the final question is what to do with my Alibaba position after the huge panic selling of this week. Here goes my answer. I will wait and hold for now. One interesting development I'm looking forward to myself is the audit by US auditors on Alibaba in China that should come out in the coming weeks. Firstly, I hope that accounting of Alibaba has been done properly, and then want to see markets' reactions to this hopefully good news. In short, I love Alibaba as a business still. I am afraid of geopolitical tensions, I can admit that, and the course of Chinese leadership at the moment too, like many people. But in the end, I hope that sense will win craziness in China too. I will conclude with the results of my current valuation on Alibaba now. As we know, Alibaba is currently trading at somewhere around $69 per share at the moment, with 10% expected annual returns, so discount rate of 10%. I come to the conclusion that the fair value of Alibaba should be $154 per share, and as the current stock price is $69, you can already see, in my opinion, Alibaba is hugely undervalued at the moment. When taking into account margin of safety and deciding what would be my buy price target for Alibaba, which would be the price level I would be willing to purchase more Alibaba stock, that is $77. And as the stock price is $69, you can see that we are under my buy price target already. So in theory, I should be adding Alibaba, but as said, I will hold my current positions. Why? Well, the only reason is that Alibaba already was my biggest position, and I too want to have some sort of diversification in my portfolio. So the conclusion is that for now, even though Alibaba stock seems like a buy, it is a hold for me now. Obviously relates to my personal situation, how my portfolio is constructed. Now, I would love to hear your thoughts on this very hot topic during these very uncertain times, so please share your views in the comments below. Looking forward to them and see how do you feel about all this, how do you feel about things I have said, do you disagree, do you agree with them? With these words, I hope to see you again in my next video, so bye bye, see ya.